Stocks bounce powered by large caps after the sharp decline on Friday. Metals and financials, they are the beginners, while industrials lag in trade.
ICICI Bank beats expectations and sees credit quality improve, as do Bank of Baroda and Shriram Finance. But IDFC First Bank and Bandhan Bank with MFI exposure see stress rise in their books.
IndiGo Airlines owner IndiGo Aviation posts a loss after 7 quarters of profits, triggering a sharp sell-off in the stock. Higher fuel prices, rising rental and maintenance costs, along with the number of grounded planes, causes the dent.
RBI Governor Shaktikanta Das tells CNBC-TV18 in an exclusive interview that festive demand has been weak, but rural demand has picked up after a hiatus, and several high-frequency indicators show that the economy is doing well.
Oil sees a sharp decline after Israel limits attack on Iran to certain defense sites, and Iran reports little damage from the assault.
Good afternoon, you're watching Halftime Report here on CNBC TV18. I'm Hormuz Patakia and Nigel D'Souza is with me. It's not over until it's over, Nigel, but for the first half, we've been fairly steady.
Well, it's been a good start to trade, but I'll tell you what, a dead cat bounce is something that most traders were anticipating. And if you looked at it, in the first 20-30 minutes, we even went into the red. But that dip got bought into. Now what the bulls are counting on is this 24,050 odd mark holds out in the near term. And that will be very, very important. And if you're looking for bright results, it's coming from these larger cap banking names. And that's why the Nifty Bank, that's flying away as we speak. It's still holding with a gain of around 600 points. It needs to get to around that 51,550 odd mark. And then it'll be good for more. But you like to see a bit of a bounce back after the kind of drubbing that we saw in, in Friday's trading session. But Hormuz, it's earnings season. Plenty of managements lined up. Let's get straight to our first guest, Finolex Industries. They delivered actually a muted set of numbers in the past quarter. Revenues declined due to weaker realizations. There was extreme volatility in PVC prices, and the prolonged monsoon as well impacted margins. To discuss this and more, we are joined by Mr. Ajit Venkatraman, the MD of Finolex Industries. Hi, Mr. Venkatraman. Good morning, and thanks a lot for joining in. Good day, actually. The past quarter was a muted one. In the past, I think you had given us a volume guidance, and you had said that you're quite confident of getting to that mark of around 10 to 15% volume growth for FY25. Do you stick by that? And I just wanted to ask you, in the past quarter, was there a bit of a volume push? Did you give discounts to your buyers, and that's what caused some further compression on margins?
See, Q2 always has been a weak quarter for the pipes and fittings industry. So this is something, not an aberration, but normal. But this quarter, we did see a very steep drop in PVC prices, and that has impacted the margins. In terms of discounts, there's not an appreciable discount, but the falling prices did build in the volumes.
Okay, so for the year, you stick to 10 to 15%. Do you think it will miss the lower end, or do you think the second half is going to be so wonderful that you can get to the upper end?
See, with the monsoons being good in most part of the country, we expect the second half to be good. Our forecast will be about 10 to 12% given the first half performance.
So, Mr. Venkatraman, good afternoon. So, in effect, you are trying to reduce the upper end of the guidance that you had given earlier. So, from 10 to 15, you're toning it down to 10 to 12%. If I've read that correctly.
That is correct.
All right. Now, I wanted to ask you, sir, about the volatility in PVC prices also that you had just alluded to because of the monsoons as well. Could you quantify that impact that it has had on your margins, and by when do you expect that to stabilize?
See, mid-June to the third week of June, we had PVC prices nearing about 97, 98 rupees per kg. And by 10th of August, we had seen that reduced to 77, 78 rupees. That's a significant, almost 20% drop, which is quite difficult to absorb when the market pricing is quite efficient. Any change in PVC prices immediately transfers into the pricing in the market. We have seen the prices stabilize, though. For the past 6 weeks to 8 weeks, we have seen it in the 77, 78 range, and we expect that it will remain in that range.
Oh, got it. What does it mean then in terms of margins? Because that's the problem pocket, right? I think in the past, when we briefly spoke in August as well, you had said that you expect the EBIT per kg to hover in that 7 to 8 rupee range, and it can go to the early teens as well. So in an EBIT per kg, what could it be for your PVC pipes, PVC resin as well? Because the past quarter was absolutely dismal.
So we expect this quarter to be an aberration, and we expect the margins to normalize in the second half. So we expect, as long as the PVC prices are steady, it is good for business, and there are no significant movement downwards. We expect the prices to be stabilized at this point, at this range, 77, 78 rupees. And this is good for the second half of the year. In terms of margins, in EBIT per kg, we still expect it to be in the 11, 12 rupees range per kg.
For PVC pipes, right?
Correct. And for the resin, it will hover around 8 to 10 rupees per kg.
Mr. Venkatraman, how has demand been on the ground? Because there was an extension of monsoons this time around. Now that the rains have withdrawn from the country, have you seen a demand pickup compared to the monsoon, and do you expect that to hold off in the second half as well?
Absolutely. The rains started a lot earlier this year, from June first week onwards, and we saw that an extended rainfall as well, but we started seeing demand pick up from middle of August, and that has kept up till now. So we expect that with the good rains and the good quarters coming up, we expect the demand to steady and hopefully increase.
Is it dealer restocking, or do you believe that this is primary demand that's coming back?
That's right. And when there is a drop in price, you expect the channel to hold back on any further purchases. But as the prices have stabilized, you have seen the demand coming back from the channels itself.
So what I understand is you're saying the dealers are restocking, as well as there is a sense of primary demand coming back as well, if I got that correct.
That's correct.
All right, got that. Also, what is the current utilization levels? I recall I asked you in August as well, and you said the next time around, maybe you'll be able to firm up those plans. So what is the current utilization levels? You had indicated that you're going to put on more capex as well. So what is that plan, and what would the asset turn be?
So the capacity utilization for the quarter had dropped a little bit to about 65%, but average for the year we expect it to be in the 71-72% range. In terms of capex, we are adding incremental capex in the existing locations in both our Baroda plant and Ratnagiri plant. So those will be increasing the pipe production per annum to approximately 470,000 metric tons per annum. We already have a fittings capacity of 50,000. So overall, it will take it to about 520,000 metric tons per annum.
And how much do you plan to spend on that, Mr. Venkatraman?
See, this will be a part of the capex, which the incremental capex and the maintenance capex spend of approximately 150 crores per year, which we had indicated upfront.
And lastly, for the resin segment, sir, what has led to the margin expansion this time around? Because the revenue growth was muted, and what do you see that going into the second half?
So we have done some basic logistic changes in the company, which is helping us to not store the raw materials for a prolonged period during the rainy season, which has helped us to control the margins.
Okay. All right, Mr. Venkatraman, we appreciate you joining in and giving us those details. You're promising a better second half of the year. For the time being, the street is buying into that, because even after those numbers, which look quite weak for the past quarter, your stock, in fact, is trading well in the green. Thanks a lot for joining in. Well, car trade numbers are up for you on the screen. I don't know whether it's an operational beat out there, but the net profit is looking good. It's coming at around 28 crores. Revenues as well up close to around 29%. So prima facie, just looking at these headline numbers, it's looking like a good set of numbers. Some of these counters, volumes are not very, very high. They've already got sold off in the last couple of weeks or so. You have car trade that's up 6%. Arvind Smart Spaces as well came out with its set of numbers, I think, on Friday. The stock actually ended lower, but today it's pulling back a lot of that. And as we speak, Arvind Smart Space is another stock that's at the high of the day.
You know, Cartrade is one of the worst performing IPOs in recent times, right? The stock had fallen to a low of as much as 600 from an IPO price of 1600, and now it's seen a recovery from those levels, now back around levels of 1050, and continues to build on those gains after the numbers that have come up. So as of now, the top line and the bottom line look strong for Cartrade Tech, the stock at the highest point of the day. Time for a short break here on Halftime Report. On the other side, we'll speak to Umesh Revankar, the Executive Vice Chairman of Shriram Finance, to discuss their second quarter performance. Stay tuned. Welcome back. Heading towards 24,500 is the Nifty, and it is being led by the Nifty Bank, wholly and solely 750 points higher now on the banking index. 51,550 is where the index is currently trading at the highest point of the day. Earnings reactions continue on both sides of the spectrum. Bandhan Bank, Yes Bank doing fairly well for themselves. Bandhan Bank, despite a weakish quarter, and Yes Bank also other income aiding profitability, but you can see the reactions on your screen. But what is not doing very well though is IndiGo, and that is Interglobe Aviation. After a first net loss that it reported in nearly 2 years, the stock at one point was down almost 12%, a slight recovery from the lows of the day, but still on with losses of around 8.5%. What is also having a good day is CDSL, currently trading with gains of around 6% after the quarterly results reported over the weekend. But another company that reported results over the weekend was Shriram Finance, and that witnessed an improvement in its NIMs and its asset quality. Abhishek Kothari caught up with Umesh Revankar, the Executive Vice Chairman, and began by asking him about the quarter gone by and how they see the credit demand going forward.
Yeah, the credit demand was quite good, much better than we anticipated. And I feel it is mainly due to the good rainfall, well spread out rainfall, better enthusiasm from the rural market. So rural market seems to be a little more active, and the demand seems to be quite good. So going forward, I feel, especially for next 6 months, the semi-urban and rural to have a better, stronger demand.
With respect to your CV financing, the AUM growth over there is about 14% YOY and about 2 to 3% sequentially. How much of it was transaction-led growth, and how much was it due to price volume growth that you saw over there?
See, if you look at the way industry is growing in CV, new vehicle sales have been flat or not really growing year on year. And if you had gone back to 19 to 22, the growth was negative. So supply of vehicles are much lower in the secondary market. Therefore, the ticket size of each of the transactions are higher. So most of the loan growth today, what you see, is because of the repricing or of the used vehicle. So it is basically volume-led rather than, it is a value-led rather than the number-led.
So do you expect, price correction in used CV over the next couple of years, and that can perhaps, indirectly put pressure on your asset quality as well?
The price will come down only when there is excess supply. I don't see any reason to be excess supply because the shortfall is so much. It may take at least another 4 to 5 years to have an excess capacity in the system, or unless the economy grows very slow below 5% GDP. Both are unlikely situation because the number of vehicle shortage is very high. The supply chain is still under a lot of strain because of that. So I do see a huge demand for vehicle. And people are not able to come to new vehicle market easily because the new vehicle prices have gone up by 30%. So if you compare with the 3 years back, the prices are up by 30-35%. So it is not very easy to come into new vehicle market and buy.
Well, sir, you mentioned that, it's not easy to enter new CV financing. We have another NBFC who in their con call did say that they intend to get into used CV financing because only 40% of the used CV in India are financed and they see a huge opportunity over there. So what kind of loan growth do you expect going ahead? And will this, competition increasing put any pressure on growth for you?
There are many small finance companies across the country who are into vehicle financing, especially used CV. There are maybe around 4,000 to 5,000 small NBFCs are there. At least by being in the business for 30 plus years, I can tell you that at least 2,000 of them are into CV financing in a small or big way in different geographies. So there is enough penetration as far as the vehicle financing is concerned. But if you look at the large NBFCs, among the large NBFCs, we are the one of the largest in used vehicle. There's enough scope for anyone to come. But the only thing is, being there and scaling it up, building a team is more important because used vehicle business cannot be done by just hiring people. You need to build a team. You need to build the knowledge. You need to have certain experience in building the business.
So a couple of high-yielding portfolio like the gold financing and the personal loans. For second quarter in a row, the growth rate over there is below your overall AUM growth, and that's impacting on your net interest margin as well. Net interest margin has been tapering down for last 2 quarters. Now, what is the outlook on net interest margin going ahead? And as and when, RBI cuts rate, how do you see your cost of funds behaving?
As far as the gold loan is concerned, we are preparing many more branches to get into gold financing because we believe that gold financing is much easier for our existing customer to come to our branch and get that additional benefit. On a personal loan, we are giving only to existing customer. When we lend to only existing customer who have certain track record, definitely the growth rate will be slower. You are right that the net interest margin may not expand beyond a certain level because we have a scale to grow in both personal and gold loan, and it will take some time for that kind of a scale.
Well, sir, your asset quality has been improving. Gross NPA ratio has been coming down. What is the outlook on credit cost as well as asset quality by, let's say, FY25?
We always have guided around 2. We should be able to maintain the current level or a little below that. And if you look at our gross stage 3, that also has been coming down, both gross and net from 5.39 to 5.32. There is a scope for further improvement and we'll definitely work on it.
So there are some rumors with respect to, regulatory concerns being there. If you could highlight, is there any regulatory concern seen at Shriram Finance or is there nothing, whatever? I mean, if you could highlight the same.
There's nothing I should say specific to Shriram Finance. If you look at the regulatory actions or their suggestions have been always been trying to curtail consumption loans, and we have not been very aggressive on the consumption loan like a personal loan where end use of the application of money is unknown. That has been very small portion of our lending. Therefore, we don't really see any such specific to Shriram.
Well, indeed, the management sounding extremely confident. Shriram Finance stock at the high point of the day as we speak. But time to slip into a short break. As we do that, CNBC-TV18 celebrates 25 years of excellence. We invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like the Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You don't want to miss out on this one. Welcome back. Well, just take a look at a few stocks. I'm trying to look at a few companies actually that came out with a weak set of numbers. IDFC First Bank, the stock was down, I think, 6-7% in the morning. It's recovered a considerable bit from the low point of the day. It could be having a factor of the markets as well being positive today. So that's why that's down only around 1.3%. The other one is IndiGo Aviation. That's cut its losses actually. It's up close to around 5% from the low point of the day. So that one should come up for you on the screen. Important to note that one. And Godavari Power and Ispat, the last quarter's numbers were weak. They've gone ahead and cut their guidance as well. But take a look at the stock. It's moved into the green. Why is that? Iron ore prices have moved up. Pellet prices have moved up as well. And volumes will pick up in the second half of the year. So that one has recovered close to 6.5% from the lower point of the day. So even some of these numbers that haven't been very, very great, they're getting away actually today because the markets are quite supportive. Well, let's move on to a CNBC-TV18 exclusive then. The RBI Governor, Shaktikanta Das, has been ranked as a top central banker by US-based Global Finance magazine. My colleague, Malvika Jain, met with him in Washington, D.C., where he spoke about the actions taken against NBFCs in the recent past and said he believed there were no systematic risk with respect to business restrictions imposed on lenders. Let's listen in.
No, there is no systemic risk. In fact, I would like to emphasize that at the moment, at the system level, the banking sector and the NBFC sector, at the system level, they remain very robust. The various parameters, the regulatory parameters, the various financial indicators of both banking and NBFC sector, they continue to be very strong. So at the systemic level, there is no problem. But where we saw the problem was in the microfinance sector. You see, in 2022, we came out with new guidelines relating to microfinance lending. Earlier, the principle was that cost of funds, the interest rate, was supposed to be the cost of funds plus 12% margin, which the MFI, the microfinance lenders were allowed to charge as interest rates. We deregulated that in 2022 because this 12% margin was becoming kind of a benchmark for everyone.
Sure.
We deregulated that and we expected that competition will result in optimization of the interest rates for the benefit of the borrowers. And who are the microfinance borrowers? They're basically the small borrowers, people who do not have were not economically very well off. So therefore, we did that deregulation on the expectation that competition will lead to better, lead to reasonable interest rates for the clientele. Now, unfortunately, that has not happened. We have been constantly voicing, the Reserve Bank, myself, my colleagues, on a number of occasions, we have been voicing our concern. In fact, even in the last monetary policy statement, I have also mentioned that. Now, what happened is that what happened was that in our on-site and off-site supervision, we found a number of NBFCs charging exorbitant interest rates.
Right.
Interest rates going up to 40%, going up to 45%.
Wow.
Now, and who is the borrower? The borrower is he is a man of small means.
Right.
And these are not well-off sections of society. And at 40-45% interest rate or even 35%
is a lot.
I don't want your viewers to assume that if I say 35 is the tolerable limit. I'm just using it by way of a random example. Now, such excessive interest rates are usurious. And apart from that, some of the charges, like for example, a few days of delay in repayment, the penalties are exorbitant. And sometimes the penalties are not adequately transparent. So therefore, whatever measure we have taken, it's in the best interest of the customer. We found certain outliers, and even in these outlier cases where we have taken action, we have been in bilateral engagement with each of them for last several months. Now, when we see that appropriate corrective action is not taken, we engage first. And when we see after several months of engagement that corrective action is not being taken to our satisfaction, then we have to act and protect the interest of the consumers, of the customers.
Sure. And then banks have been reporting increased stress in unsecured retail loans. The RBI has raised risk weights in this segment last year as a warning. Does this remain a concern for you?
No, I think after we introduced those additional risk weights, etc., in November last year, the segments where we imposed these additional we impose certain additional regulatory compliance requirements, the provisioning requirements. In those sectors, we have seen we have seen moderation in credit growth. So that has happened. There are, with regard to other sectors, we are closely monitoring every aspect of the credit market, every subsector of the credit market. We are monitoring. As and when something is required, we will act and we will take preemptive action before the problems start building up.
RBI's draft proposal on liquidity convergence norms has been in the public domain for a while. Banks have expressed concerns about the potential impact on capital and by extension on credit growth. Is there a possibility of some kind of softening of your stance on
You
this
see,
issue?
we have adopted in the formulation of regulations, we have adopted a very consultative approach. And that is the purpose of putting this discussion paper, to get comments of the stakeholders, to take that into consideration, examine that, and then come out with our guidelines. We have received a number of suggestions.
And you can hear views from the RBI Governor on moderating inflation, but the risks around it on the domestic economy doing well and positives significantly outweighing the negatives when it comes to the festive season demand. Catch excerpts from the exclusive interview all day today, only on CNBC-TV18. Time for a short break. Up next, we'll be joined by the management of Ramkrishna Forgings. Managing Director Naresh Jalan joins us to discuss the quarter gone by. Stay tuned. Welcome back, and on to another corporate conversation. Then Ramkrishna Forgings is a steady quarter from them. Volumes have increased sequentially and on a year-on-year basis as well. The company has also received a significant order inflow amounting to over 1,500 crore rupees. We have Naresh Jalan, who is the managing director of the company, who is joining us to discuss the quarter gone by as well as the road ahead for the company. Mr. Jalan, good afternoon. Thank you so much for joining in. You had given a margin guidance earlier for FY25 to be around 23%. For the first half, you currently stand at 21.7%. Do you think you're confident you would manage to achieve this guidance in the second half of the year?
Yes, I think good afternoon. We are very confident of maintaining our margins going forward.
And what would contribute to that, sir?
I think with the kind of volume growth which are coming and with the economic of scales and all our assets performing, I think the acquisitions, if you see the quarter gone by, mainly our acquisitions have had lower margins. RKFL on a standalone basis did 22.8%, somewhere closer to 23% margin only. But our acquisitions have had a lower margin, but I think our acquisitions have started doing well. And this quarter onwards, we will see higher margins from our acquisitions coming in.
Right. Hi, Mr. Jalan. Good day, and thanks a lot for joining in. What about your volume growth? I think you were guiding for mid-teens. Could you tell us on a consolidated basis, what is the volume growth you're looking at? And break it up for us between the export market and the domestic market.
I think for the full year, we have guided for a 15 to 20% volume growth. And I think we are sticking to 15% volume growth for the full year. I think we stick by that guidance. And both in terms of exports and domestic, we are doing well. I think domestic market will do much better in coming quarters. So it should be a premix of 60-40. 60% would come from the domestic market and 40% coming from exports.
Mr. Jalan, you just mentioned you're sticking to 15% instead of 15 to 20. So would it be fair to assume that it will be on the lower end of the guidance for the volume growth?
No, in terms of volume, it may go up further more than 15. But overall, in terms of revenue, it may not, because of the steel price softening, we may see the lower end of terms in terms of our revenue.
All right. So margins around the 23% odd mark. Revenue growth is likely to be 15%. The volume growth will be higher because realizations could be softer. Are we getting that correct?
Yes. Yes, you're getting it correct.
Tell us a little bit more about this LOA for manufacturing and supplying of forged wheels for Indian Railways. I think the total project cost is closer on 2,000 crores. The operations begin, I believe, from next fiscal. So the total investment, how are you going to fund that? And what will the asset turn and margins be on this particular investment?
So we are funding this through debt and equity. Both our joint venture partners and we have invested close to 40% as equity and 60% is debt we are taking on in the company. And we are expecting productions to start by December 25 onwards. And last quarter, we should see significant production coming in from here. And we are looking at an asset turn of 1.5 or 1.8 around in this overall, coming in close to around FY28 from this asset.
Mr. Jalan, I'll get to the debt picture in just a bit, but I just wanted to go back to the volumes bit. They have increased year on year as well as on a sequential basis, but realizations have dropped on both parameters. Could you explain that? And also, do you see realizations improving going into the second half?
Realization mainly, if 3% plus has gone down, only because of the raw material prices. 4%, there is a decline in steel pricing globally, and that has impacted the realization. So I think steel prices going forward also, we are seeing soft market in steel. So it will be continued. I think we don't see any increase in realization due to raw material increase. We are, while the value add portion, we are increasing and we are confident with the value add increasing, we will somewhat be able to cover up this realization. But still, I think the realization will be on the lower side because of the steel pricing.
I'll go back to the debt bit. Mr. Jalan, you just mentioned that you are taking on some debt for this order that you have received. How much is the current debt on your books, and by when do you expect to bring it down to sustainable levels?
No, we as Ramkrishna Forgings, we have a debt absolutely on a sustainable level, close to around less than one time EBITDA, that which we had forecasted, and that is what we are going to maintain. The new debt which is coming on will be on the joint venture company directly. It is not going to be on the RKFL side. It is going to be RKTR balance sheet. And RKFL is funding equity on its portion of 51% holding. And accordingly, the Titagarh is funding 49% and balance is coming as debt into that company.
All right, Mr. Jalan, thank you so much for sparing time and taking us through the quarter gone by. Wish you good luck for the second half of FY25 as well. There is a management there of Ramkrishna Forgings. The stock near the lowest point of the day, 2% lower, is down almost 13% in the last 1 month. Most of that fall has come in the last 7 days itself.
Yeah, Hormaz, I just want to take a look at some of these pharma names. There suddenly appears as a big uptake out there. Pull up the intraday chart of Lupin. The stock has spiked to the high point of there. Just want to do a quick check out there. Abbott as well has moved up. So I think we should get that stock as well. And Laurus Labs defying gravity as always. Hormaz, that's the trend. Last few quarters, numbers miss. But the street believes the next quarter will be better. In fact, we're talking about markets being under pressure. Laurus Labs posted its numbers. I think it's up close to around 8.5–9%. So, what a stock.
The street loves to hear the 4 magical words, right? The worst is over. They always hear that and then they get excited about it. But Laurus Labs nearing levels of almost 500 now. Second straight day of gains post its earnings. The Nifty Pharma index has surged to the high point of the day. Time for a short break. We get you more on the markets and specific stocks on the other side.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
Welcome back. It's a good-looking screen. And the point that we were making earlier today, that these call writers are getting too confident, and some of them are going to get stumped on the wrong side. Just take a look at the 24,200 call. You have the 24,300 call as well. Those writers, they are packing their bag. They are saying, let's move out, because now the call buyers are making money and the premiums have shot through the roof. So that's a sign that we're seeing. And also in an uptrending market, you want the nearest possible strike to see some kind of writing. And that's happening at around the 24,300 put, which is seeing a fair bit of open interest build up. I think it's one of the most active strikes out there. These are the calls that are getting unbound. In a short while from now, yes, my directors decided to pull that up. That's the put writing that I'm talking about. So you have a reference point now, the 24,050, 24,100 odd mark. If this is the dead cat bounce, then we go ahead and retest that level. But for the time being, the bulls will feel that they've got some kind of a near-term base in place, and near-term reference point, 24,000 mark is important. When you get more confident, when the 24,550 mark gets taken out, and if you pull up the 100 DM, you'll see that's where the 24,550 mark as well comes in. The good news today is the Nifty Bank is making a dash, and that's the one that's holding one end up. So good times, Hormuz. Good to see some green on a Monday morning after the bears went into the weekend, parting all the way.
They did indeed, and after 5 days of red, some bit of green is of course welcome for the bulls, and that 5-day losing streak also for the Nifty was the 4th straight weekly loss for the index. A small programming note as we slip into a break. As we prepare to ring in the festivities this Diwali, tune in to CNBC-TV18 at 3 p.m. tomorrow to hear out the biggest of market voices giving their tips on how can you make your portfolio prosper this Diwali.
Welcome back, and joining us on the show now is Manoj Mandot of Sri Mandot Jewelers. Manoj, hi. Thank you so much for joining us. And this year clearly belongs to silver. With the kind of run-up that we've seen, silver has outperformed not just the precious metal as a space, but various other commodities, whether it has been industrial metals and various soft commodities as well. With nearly 45% of gains in the global markets right now, we've done $35 an ounce on the higher side. ₹1 lakh in India. Are people still buying at these levels?
Good afternoon, Manisha ji. There's a lot of potential still. Let's not forget that this all-time high is just in Indian market, whereas in COMEX it's about 49 ounce. So I think still there's a long way to go with regards to the hike of the rates. Considering the Indian markets, I don't think so that has really affected the consumer with the kind of sentiments they have during the festival seasons. It's all routine. I mean, I don't think so. The prices have really affected them. Rather, they buy more when the prices go up at times.
Manoj, what are people really buying, and what are the ticket sizes? Because there's a lot of conversation going around that maybe the bill size would remain the same, but people would buy lesser silver. Are you seeing that trend in?
Yes, that depends on the market at times. But majority of the people, I think they do cut their purchase by about 15 to 20%. They don't really consider the volume, but they consider the amount of which they want to buy the metal. That is obviously seen. But as and when we move forward, sticking on to the rates, probably when the markets settle down, I think what we lacked about 15 to 20% should come on platform again.
The conversation also is that with the kind of fundamentals that silver has about a deficit and industrial demand, etc., it's only going to go higher from here. Is that something that the consumers are looking at in sense of strong fundamentals, not wanting to miss out and thus buying?
There are various other factors also determining the surge of this price, such as combined expectations with rate cuts and geopolitical tensions. They do look after all this. People are aware of what is driving the market as of now. But as and when going forward, they are also aware of the fact that prices are going to go higher sooner or later. We also expect it to match or outperform gold in the recent months or maybe later this year.
Manoj, we per annum see around 5,000 on a bad year to almost 8,000 tons of silver imports into India. What is your sense on the number that we could see this year?
Potentially about 25% more in the first quarter of the year itself. People are waiting for a small correction. See, market has already factored in with various reasons as we discussed now. That is, industrial demand is higher. People have already factored in with another rate cut by Federal Reserve next month and geopolitical tension. Any negative news about these factors will lead to a small correction. I think we can expect that in this month. Let's not forget about the US elections in the corner. These are the reasons could potentially lead to a small correction. But overall, I think moving forward, there's a lot of potential in the next year for silver specifically.
So what are the kind of prices that you're looking at going forward in the next couple of quarters, if we can talk about that, in the global markets and the Indian markets?
Expecting about 1.25 in the Indian market and should about $37 in COMEX.
And what is the sense that you see in sense of buying trends right now? Is it bars and coins? Is it artifacts? Is it bigger items that people are buying? What is it that really seems to be trending right now?
Out of 100, I would state about 70% of the people are buying in bars and coins, and about 30% of the people, the rest of the 30% of the people who use for say weddings or any other purpose, they are into articles and artifacts.
And what would you say is an average ticket size of what people are buying?
About 20% lesser than what they bought last year in terms of value. The volume remains less, but the value remains the same.
Mr. Manoj, earlier we do understand that silver also had a very cyclical way to it, that you would see most silver being bought around this quarter only, the last quarter of the the calendar year and the first quarter of the next year, because that is when the most weddings also pass. But with the way silver really seems to be changing its attributes from being just an investment metal to industrial metal as well, would you say that it is an year-long market that we are seeing in sense of silver?
Considering the growth we have seen in the last year, there's a huge demand in industrial market, probably more than what we expected last year. Going forward, I think industrial demand is going to go higher than the consumer demand, is what we feel.
And also, how are you looking at self-purchase vis-a-vis gifting? Where do you see an uptick coming in?
Probably starting from tomorrow, that is Dhanteras.
All right, Manoj, thank you so much for joining in. Insightful conversation there. Manisha, thanks a lot as well. The year well and truly belongs to silver. But earnings continue thick and fast. Ambuja Cement's numbers on your screen. Margins at 16.1% compared to a poll of 11.7%. The stock has spiked to the highest point of the day. The net profit too at 500 crore, well above the poll estimates of around about 300 crore rupees. The revenue too 4,213 crore compared to estimates of around 3,820 crores. Nigel will be joining in shortly for further insights. Ambuja has been in the news as well, right, over the slew of acquisitions that it has made, whether it is in regards to Sanghi, Penna, and the most recent acquisition that it made as well. And this is the reason that the stock has been in focus. The numbers look above estimates prima facie, but the reaction, the devil lies in the detail. Of course, Nigel will be joining in with more insights shortly. The revenue, though, 4,213 crore rupees at 6.1% higher on a year-on-year basis is what Ambuja Cements is reported in terms of revenue. The volume growth number will be the one to watch out for this time around, as well as the EBITDA per ton. These are the two numbers that we will be watching out for when it comes to Ambuja Cements. For now, the stock has spiked to the highest point of the day, and it's prima facie the numbers do appear on a beat on expectations. We'll get back with more details on that, but with a wrap on halftime report for now from Nigel, myself, and the show team that put this show together. Thank you so much for watching. Business Lunch takes the action forward.